most hated V-shaped rally. And it, of course, has a lot to do with when stocks fell in a waterfall decline into April. Nobody likes to be sitting on stocks, so a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decision.
You've heard that from Tom Lee. If that is true, meaning the headlines are loud while the real money is being quietly invested in companies, most investors still don't understand. Currently, 4 stocks are making bold moves in markets that could shape the next decade: crypto-enabled finance, quantum breakthroughs, and AI-driven computing power. They're not just chasing trends, they're building the rails of the next financial and technological era. One of them is up over 1,000%, another is solving problems that even AI can't crack, and a third just hit an all-time high while reshaping how the world trades stocks and crypto. But here's the catch: most people won't recognize these names until it's too late. If you're investing for profit, for future-proof returns, or for the kind of growth that turns portfolios into fortunes, this is a video you can't afford to skip. Stick around, because by the end, you'll know precisely where smart money is quietly positioning itself and which of these 4 stocks might deserve a place in your portfolio. Starting with the hood, Robinhood stock is up over 160% in 2025, hitting back-to-back record highs. From launching crypto staking to pioneering stock tokenization in Europe, Robinhood is no longer just a trading app. It's becoming a global financial powerhouse. But here's the real question: should investors buy Hood now or wait for a pullback? Let's break down the stock's performance, forecast, and growth catalysts to help you make an informed decision. Robinhood Markets just posted a 12.8% jump in a single trading session, pushing its share price to $93.63 before hitting a new all-time high of $99. That's not just noise, it's a signal. It wasn't by chance, but a strong catalyst, a bold expansion into crypto. Robinhood introduced U.S. stock and ETF tokens for EU investors, offering zero commission trading, dividend support, and 24/7 access. It also launched crypto staking for Ethereum and Solana in the U.S. According to CEO Vlad Tenev, this move lays the groundwork for crypto to become the backbone of the global financial system. But let's look at the numbers behind the hype before telling you to buy or sell. Robinhood is expected to post quarterly earnings of $0.3 per share, a 42.9% year-over-year increase, with revenues forecasted to grow 30.1% to $887 million. Even more compelling, Wall Street analysts have revised their earnings estimates upward, a historically strong indicator of continued stock appreciation. Remember, momentum follows sentiment, and right now 24 technical indicators are flashing bullish, with 0 bearish signals. We can't discuss stock growth without mentioning the company's global expansion and strategic acquisitions. Here it is: in May 2025, Robinhood acquired WonderFi, a major Canadian player in digital assets. EU, it's also actively pursuing MiCA licenses, which will enable it to offer crypto services across 27 EU countries. This is more than just a US growth story. Robinhood is positioning itself as a borderless financial infrastructure platform. That kind of long-term global vision tends to attract not just retail investors, but institutional money. I know this stock sounds and looks promising, like every other good investment opportunity in the market, but not all that glitters is risk-free. The Fear and Greed Index currently reads 39, fear, and Robinhood has experienced 10% plus volatility over the past 30 days. Though the 5-day forecast sees highs of $98 or $41, the price could temporarily dip 6.3% below the current level before another leg up. As always, risk management is key. Consider dollar-cost averaging or implementing a stop-loss strategy if you are entering at these levels. A quick snap on the forecast and investor outlook for Hood stock: analysts forecast Hood stock reaching $107.45 by July 30th, and potentially trading in a channel between $65 and $131 over the next 6 to 12 months. The average target price for 2025 is $90.92, translating to a potential return on investment of 42.91% from current levels. And with 63% green days in the last 30, the trend is clearly in the bull's favor. However, the question now is, should you buy Robinhood stock? If you're bullish on crypto adoption, global fintech expansion, and investor-friendly innovation, Robinhood checks all the boxes. However, short-term traders should stay cautious amid volatility. Long-term investors? This could be an entry point worth serious consideration. Please remember, always do your diligence. No information, materials, services, or other content provided on this video constitutes solicitation, recommendation, endorsement, or any financial, investment, or other advice. But let me know in the comments, are you buying Hood, holding, or waiting for a dip? Let's move on to the three other stocks with a different investment profile. The quantum computing revolution has quietly crossed the boundary between science fiction and market reality. Once a futuristic fantasy, quantum technology is now poised to become the next frontier in high-growth tech investing, alongside AI, cybersecurity, and biotechnology. While still in its early stages, the quantum computing industry is experiencing a surge in investor interest in 2025, driven by real-world applications, landmark technical milestones, and increasing global demand for optimization at scale. Analysts now project the global quantum market will exceed $125 billion by 2035, unlocking a wave of opportunity for forward-thinking investors. Yet, as with any disruptive space, timing is everything. Why quantum stocks matter to modern investors? Unlike traditional supercomputing, quantum systems utilize the principles of superposition and entanglement to solve complex problems that are beyond the reach of classical processors. From AI acceleration to drug discovery, materials science, and cryptography, quantum computing offers transformational potential. But this opportunity comes with a caveat. Investing in quantum stocks is not for the faint of heart. These companies often burn capital aggressively, trade at nosebleed valuations, and operate in a technical landscape still in flux. Still, for investors seeking asymmetric upside and early exposure to disruptive technology, certain players stand out, notably D-Wave Quantum Inc. QBTS, Quantum Computing Inc. QBT, and IonQ. No quantum stock has captured Wall Street's imagination in 2025 quite like D-Wave Quantum. Surging more than 1,280% over the past 12 months, D-Wave is the undeniable momentum leader in the space. The Canadian firm is unique in its focus on quantum annealing, a specialized model optimized for real-world problems like logistics scheduling, AI model optimization, and manufacturing. Clients include Volkswagen, MasterCard, Shimui, Masha, NASA, and Deloitte, all of which are currently using D-Wave's solutions, not 5 years from now. Ford reported an 83% reduction in manufacturing schedule time. Pattison Food Group saw an 80% cut in staff scheduling complexity. Unlike many moonshot ventures, D-Wave's Leap Quantum Cloud service is live in over 40 countries and already generating revenue. According to Q1 2025 earnings, D-Wave reported $15 million in revenue, a 6x increase year over year. We expect sales to exceed $30 million by 2026, with top-line growth of 183% this year and another 62% in 2026. Currently, QBTS holds a Zacks rank number 2 buy and a bullish technical wedge setup. We expected a breakout above $14.70 in our last Quantum Stocks video, which has played out with an over 5% increase in price. In short, D-Wave is no longer a story about potential. It's a real business with proven use cases. For investors looking to invest in tech stocks with disruptive commercial traction, QBTS is a worthy consideration, according to Dr. Alan Baratz, the CEO. This is not speculative R&D. We are solving mission-critical problems for the world's largest companies today. Moving on to the next stock, Quantum Computing Inc. ticker symbol QUBT. This stock is an undervalued momentum play flying under the radar compared to D-Wave. Quantum Computing Inc. has quietly built momentum over the last 3 months. The company's approach is broader, offering a full-stack hybrid quantum platform designed to bridge classical and quantum systems for enterprises. Although it currently holds a Zacks rank number 3 hold due to stagnant earnings estimates, the revenue outlook is promising, with projected growth of 34% in 2025 and a massive 200% increase in 2026. From a technical standpoint, QUBT is forming a bullish flag pattern, suggesting possible continuation if it breaks above the 18.15 resistance level. For investors looking for growth stocks in the quantum sector that haven't fully priced in upside, QUBT is a name worth tracking closely. The next stock we are closely monitoring is IonQ, a high-risk, high-potential stock. If D-Wave is the revenue-generating pioneer, IonQ is the moonshot pure play. IonQ is building trapped ion quantum systems with best-in-class 2-qubit fidelity, a crucial measure of quantum accuracy. Their all-to-all connectivity architecture is a potential game-changer for scalable, error-resistant computation. The stock carries outsized risk. There's no backup plan if quantum doesn't deliver. But recent developments bolster its credibility. U.S. Air Force Research Lab contracts room temperature operation, reducing infrastructure costs, new software stack and simulation tools for developers. While the valuation is aggressive, The technical fidelity and government validation make IonQ an intriguing speculative investment. Pairing IonQ with more stable tech giants, such as NVIDIA or Alphabet, is a prudent approach for investors who seek to balance upside with portfolio durability. Let's take a closer look at investors' outlook. Quantum stocks like QBTS, QUBT, and IonQ are speculative, no question. But they also offer frontier-level exposure to a market that may define the next technological era. In a world increasingly driven by data, AI, and real-time optimization, the companies that can master quantum will unlock exponential value. While investing in quantum computing stocks today involves volatility and short-term risk, the long-term investment potential is extraordinary. D-Wave, in particular, stands out with real-world utility, enterprise traction, and accelerating revenue, qualities rare among early-stage tech firms. For investors willing to tolerate volatility in exchange for outsized growth, quantum computing offers a calculated risk with asymmetric reward potential. D-Wave Quantum remains the most promising bet, with real contracts, proven technology, and a growing global footprint. That said, every investor should assess risk tolerance and diversify accordingly. The quantum race is heating up, and while not every company will win, those that do could redefine how we compute, solve, and create. The next trillion-dollar tech trend isn't just AI, it's the machine that will supercharge it. In a market overflowing with noise, these four companies stand out for one reason. They're building platforms that could reshape the financial and technological landscape. Together, these stocks represent four distinct opportunities at the edge of innovation: fintech, quantum computing, hybrid systems, and pure speculative tech. Each caters to different investor appetites, from income-chasing traders to visionary risk-takers. If you're looking to diversify with high-growth, high-conviction plays, it may be time to take a closer look at Hood, QBTS, QUBT, and IonQ. Drop a comment below and let us know.